Ah, see, it's already happened.
You're live.
Fantastic. Good afternoon and welcome to this live Ask Me Anything About Property Investing. We are doing this at a different time than we would ordinarily. Normally we do these on a Monday evening at 8:30 p.m. However, what we're doing is last Monday evening we had some technical challenges in the office with internet connections. We couldn't stream. So we decided to do an extra one this weekend, hence today. I got a couple of messages this morning. They didn't realize the clocks have changed. So hopefully people are aware that we're starting now at 12 o'clock. For this Q&A, and I'll be here for about half an hour to answer your questions about property investing. The great news also is we're restarting our property meet. You may have already heard. If you haven't heard, I don't know where you've been. So the property meet is restarting. That's actually the wrong page. There you go. The property meet is restarting on Tuesday, the 9th of November. So just over a week's time. Really excited. Tickets are really selling very quickly for that. We have VIP tickets, which include dinner with me afterwards. They're all now been sold out. We've got general tickets available, but they are selling quickly. So if you haven't already booked, make sure you get booked on. In fact, if you book on this session today, I've got a little extra gift for you. So watch out for that. We'll talk about that in a little while. So let me know you can see me and hear me okay. In fact, let me know where you're watching from, and then we'll get started in just a few moments. Okay. Okay, so we've got a first question actually. Let's start with our first question. So if you're just joining us now, let us know where you're watching from. You can see and hear me okay. And then, as I said, we're here for about 30 minutes to answer your property investing questions. So Jack Smith's question is, hi Saj, hope all is good. What are your thoughts on renting out properties as an Airbnb in order to achieve a higher monthly rent? Or is there a lot of hassle involved with this concept? Thank you. Jack, this is a great question. We did a video just on the YouTube channel just this week about service accommodation, which is essentially what the Airbnb model is. And what you're effectively doing is having people stay for a shorter period of time with you, but paying a higher rate. So when you look at, say, you're renting out a flat, say at £600 a month, when you work out what you're getting per night, equates to a very low figure compared to what you would get if you were charging them on a nightly basis. And hence, that's where you're making much more cash flow. So on a standard rental, let's say you might be making, say, £600, but then you might be charging a nightly rate of, say, £100 a night. And over a month, that could be, say, £3,000. It's unlikely you're going to get full occupancy, that every single night somebody will be staying with you. So occupancy level about 80%, I think, is good. If you're below 70%, generally you'll find that's not a good place to be. So it's quite tight. So as long as you're kind of 80% and above occupancy levels, you'll find that will work quite well. And because your profit margin is really on those last few nights on the higher occupancy levels. So from a purely financial point of view, it makes absolute sense. You make much more money than you would from that same apartment or house, whatever type of property that you're looking to do the short stay model on. However, there are a number of things that you need to think about. First and foremost is to understand that this is very different from, say, renting a flat on an AST and then leaving them there for 6 months and forgetting about it. And often you hear very little out of them. The tenants, they'll pay the rent on time, hopefully all going well, no issues, maybe a little bit of maintenance, and that's pretty much it. Now, when you're doing short stays or Airbnb or service accommodation, whichever name you want to give it, effectively what you'll have to remember is what you're doing is providing a service, and it's more hospitality. It's a little bit like when you go and stay in a hotel and you expect to be taken care of during that time that you're there. The guest expectations are generally higher than if they're staying in a property on a standard AST. So that's the first thing you got to remember. So it's a lot more work involved in terms of looking after them. You've got things like linen change as well that you'll need to do, turnaround cleans on the property every time that you've got an occupant coming and going. And if that's fairly frequent, then you've got lots of those happening. And of course, you're paying all the running costs as well. So gas, electric, water, council tax, TV license, cleaners, internet. All these things are operational costs that you need to think about as well. So there's a lot more work involved. Then a couple of other things just to be mindful of is many people make the mistake of not really understanding from a planning point of view, a licensing point of view, mortgage conditions, freeholder consent. All these things need to be considered as well, whether they are or aren't going to be relevant for what you're looking to do with that property in that locality. Hope that helps. Hope I give you a few pointers. If you're just joining us, thank you so much for joining us. As I said, we're doing a Sunday session today because we missed the one last Monday because we had some challenges with the internet in the office not performing. And then on Tuesday, just over a week's time, we're relaunching our property meet. Really excited about that we're relaunching that meeting. This is where you can network with 100 plus people. Traditionally, it's been the largest property meet outside of London. Really good turnout. We've always sold out tickets way before the event. So it's really important if you want to come that you book your ticket nice and early. In fact, I've got a great offer for you on this particular live today. So if you buy your ticket off the back of this, in fact, let me tell you what the offer is. If you buy your ticket before tomorrow night, i.e. Monday night, Monday the 1st, then what I'm going to do, I'm going to be running a couple of workshops next year. One is early next year, probably January. One is going to be for people that are brand new, just starting out in property and really unclear what's the right strategy for them. So it's really more of a strategy session, trying to work out which is the best method for them to be able to make money from property. Then the other workshop I'm going to run is for those people who are more experienced that maybe hit a bit of a plateau and they're getting a little bit stuck. They're not really quite sure which is the best way forward for them. And what I'm going to do is gift you one of those workshops if you book this either today or tomorrow, Monday evening, depending on when you're watching this. We've got another live tomorrow evening as well. So this offer I'm going to hold up until tomorrow evening. And all you need to do when you go to the booking page, when you ask for a coupon code, you need to enter 111 gift, i.e. 1st of November gift. And with that, what you will get, as long as you're using that code, if you book today or tomorrow, I'm going to gift you one of those workshops. You can pick whichever one you want to do. Really, it will depend on your experience. If you're brand new, then it's really going to be the strategy one. If you're quite experienced in property, then it's probably going to be the one about how to really scale the business and how to grow in 2022, because the market is changing, the market's evolving. So it's important that you're doing the things that are going to be working. I'll be sharing some of my things that we're doing as well. So there's one other thing I'm going to do as well as part of this gift, but I'm going to share that in a moment. So let's jump back onto the questions, which is why we are here. So let's get the next question up first of all on the screen. So next questions from Wakar on YouTube. What do you think about converting a semi-detached house into 3 flats in the Walsall area? Well, Wakar, a few things to think about. Firstly, I would say, why is it you want to do it? And I'm assuming you want to do it because it means it will generate more rental income. So, for example, the house might be, say £600 rent a month, and where you've got 4 flats there might be, say, £400 each. So you're effectively doubling your rent by having 3 flats there as opposed to 1 house. So that makes sense from a numbers point of view, that you're going to be generating much more income. Now you've got 3 units to look after as opposed to 1, so that's something to be mindful of, but that's only a minor thing really. I guess the factors that you need to think about is, are you going to be able to get planning permission to be able to change the property into 3 flats? Because that's something you'll need to do. You'll have no permitted development rights being able to change a house straight into multiple units. A HMO, normally up to 6 people, can be done in a permitted development if you're not in an Article 4 area. But if you're turning it into flats or self-contained, you're going to need planning permission for that. And then, of course, looking at the cost, how much is it actually going to cost to convert them? Depending on how nice these flats are, what kind of building you're in, what kind of state that building is in right now, how much work you're going to have to do. Remember, they're going to need separate utility supplies as well. So that's separate electricity, water, essentially for each of the properties. So the cost of conversion is not quite the same as turning it into a HMO. The costs are much higher turning it into self-contained units. You've essentially got 3 kitchens as well. For in a HMO, for instance, you might only have 1. And the bathrooms, you've got more bathrooms as well. So those are things that I would think about. And as long as you can get planning permission, you can get the conversion done, the costs are reasonable, then the next thing to look at is, of course, okay, what is it going to develop for me? What's it going to bring me in terms of return on investment? So how much am I spending and what's it going to bring me back? What's my return on capital employed is the figure that I look at. So what that means is, how much am I putting into the property versus how much am I going to get back out? And when am I going to get that money back out? So for instance, let's say it costs you, pick a ballpark random figure out of thin air. Let's say it's 20 grand a unit. So you've got 3 of them. It's going to cost you £60,000. You're going to spend over and above on this property right now to be able to generate an extra £600 a month. And that's the way I would calculate it. So I would say, right, I've got £600 a month extra that I'm going to be making over a year. So what's that? £7,200. But I've spent £60,000 to do that conversion. So that's what you need to think about. And it may be that you decide to refinance at the end of it and be able to pull some of that money out. So that would be really my thought process in looking at whether I'm going to convert a property to flats. And of course, other things we haven't really talked about is who's going to be the occupant, who's going to stay there, what kind of demand is it for those type of properties as well. So I hope that helps. I'll give you a few pointers. Let's get our next question up. Just whilst, this one's from Instagram. So on Instagram over here on this camera. So from Yasser, what are the things that you have to buy for setting up an SA? So great question. Think about it as if you're going into a hotel, what is it you're going to expect for them to provide? Now, of course, depending on the type of hotel, you're going to have a different expectation for different things. So for example, things like an ironing board and gown and things like this, are you going to get that in every single hotel room that you stay in? No, not necessarily. It will depend on the type of hotel or what quality hotel it is. In the same way, think about who is your customer, who is your guest, who's going to come and stay with you, and what expectations do they have in that particular property. So they're going to be turning up with a suitcase with clothes and some other items, but really that's it. They're just bringing a few items to stay for a few days or a few weeks, and that's what they're going to have. You've got to provide pretty much everything else for them for it to work. And that's the way to think about it. So from a furnishing point of view, it's going to be all the furniture, your bed, sofas, wardrobes, bedside tables, coffee tables, TV, and then your kitchen needs to be fully kitted out with everything as well that they're going to need. So really thinking about who is going to be staying, what expectation do they have, and what is it that you need to do to meet those expectations. An easy way to think about it is like hotels. You get 2-star, 3-star, 4-star, 5-star hotels. What kind of grading are you look to trying to achieve? And that way you kit the property out accordingly. Hope that helps. Yes, I hope that gives you a few pointers. As I mentioned earlier on, our property meet is back up and running. So I just want to share with you one extra gift. What I said earlier on for those that just joined us, that if you book your ticket by tomorrow evening, off the back of this video, then what we will do is give you a gift, because I'm running 2 workshops in January. One will be for those that are just starting out in property to help them get the right strategy, because the strategy is important. Many people pick the wrong strategy when investing. And the second workshop I'm running is that going to be for those that are more experienced in property, but maybe hitting a bit of a plateau and they really want to scale and build their business because things are changing, and which is going to be the right way for them to grow in 2022. So those 2 workshops I'm running in January. If you purchase your ticket for the property meet today and tomorrow, either today or tomorrow, then what we will do is give you a gift on one of those workshops. And all you need to do is enter this voucher code when you go onto the booking down here, sajhussain.com networking. And when you go to book your general ticket, because the VIP ones are now all sold out, we'll put this voucher code in 111 gift, which is essentially 1st of November. And this will be valid up until the end of the 1st of September, i.e. tomorrow evening. And then this will expire. But the other thing I'm going to do, just to encourage you to and reward you for doing this now, is that our guest speaker is Neville Wright. Neville Wright's a person who started his business late 60s. By mid-70s, he was buying property, renovating and selling property. And he's grown that business quite substantially, but also he built a non-property business as well, which is providing like pushchairs, prams, a little bit like a mother care type business called Kiddie Care. And he built that up into a huge business that he sold for 70 million. Yes, you heard right, 70 million pounds to Morrison's a few years ago. And he's continued to grow his property business. He's built 600 houses recently as well. So, he's somebody very, very active, worth over 100 million pounds. Now, I'm sure there's a thing or two we can learn from somebody like that who's very experienced in business, in property, but also in e-commerce as well, because that's essentially how he grew his kiddie care business that big. Now, there is a round session table available with Neville on the day before. So what that essentially means is I'll be hosting a small roundtable session with Neville before the main property meet on Tuesday. And those tickets are £100 if you want to join us on there. But what I'm going to do for all the people that purchase their ticket either today or tomorrow using this gift code 111 gift, I'm going to enter them into a prize draw. I'm going to pick one winner that we will announce on Thursday, this coming Thursday, who will win a place at that table. So you're getting an extra bonus, spending some time with Neville in a very small group of people at our offices before the main property meet. So personally, I think that's an awesome gift. I don't know. Let me know what you think. I was thinking, what can I do to reward you? The team were reluctant about giving away one of those tickets because we've only got a very few number available anyway. But I thought, hey, look, I'd love to reward you for doing this today. Tomorrow you turn up to these Q&As and hopefully I'll give you value on these. But as a little thank you for booking either today or tomorrow, I'm going to enter you into that prize draw and also one of those workshops as well. So make sure you jump over to the website, sajhussain.com/networking. Use this gift code to get your seat booked in. Now let's get back to the questions. Khalid, if you put the next question up for me, please. Projectile Creative on YouTube. Hi Saj, I've been offered a mortgage in principle of 125,000 and I have a 30,000 pound deposit to put in. Issue is there is no decent properties for 155,000 in Birmingham. How would you approach this? Well, I'd say first of all think about what is it ultimately you're trying to do. I'm assuming what you're trying to do is get onto the buy-to-let ladder. I'm assuming that's what it is. Let me know as another reply if it's not. I'm assuming you're trying to get your buy-to-let and up and running with that. So the buy-to-let will generate you a small amount of income each month. Now, as you said, 155,000 is not going to get you very much in Birmingham. But then the thing to think about is what are the periphery areas that are maybe a little bit cheaper, but actually still quite good renters. So for example, we're surrounded by a number of towns, Dudley, Walsall, Wolverhampton, Coventry, far down as Redditch. We've got lots of towns that are surrounding Birmingham, and some of those will have pockets where the properties rent really well. The prices are much lower. Now, it's not going to be everywhere that the prices will be much lower, but you also want to avoid the most cheapest areas because often those are the places that people are trying to get out of desperately. They're not the nicest places for people to want to go and live in. So it's not necessarily the cheapest, lowest price property you're looking for because you want to have property where people want to live. They are happy living there. Otherwise, you'll have a high churn of tenants. They'll stay for a short while, then they'll move. They won't stay very long at all. Now, personally, I think it's important if you can find a property where you can add a little bit of value to that property, improve it a little bit. You're on a fairly tight budget. That may not be possible, but it may be if there's room for improvement, something you can do further down the road. For example, it may be possible to put a nice extension on it, make it bigger, turn it from a 3 to a 4 bedroom, which might move into a different price bracket. So that would be my suggestion on that. I hope that helps. Next question. Nurahar, I think, on YouTube. Hi Saj, can you advise on best areas in Birmingham to invest in buy-to-let property at the moment? How should the ownership be sought to minimize CGT? Many thanks. Well, most people that are investing in property that are looking to build it as a substantial business, it's not 1 or 2 properties, that they want to grow that, are buying in companies. So the company structure tends to be the most common way to do that. Buy-to-let mortgages are much more readily available for those buying property in limited companies now, whether or not you've got previous property. There's just much more choice of mortgage products available. Now, your question about where to buy is very similar to the previous question in terms of where do you buy-to-let? And depending on your budget and how much you've got to spend, you could either purchase somewhere where is slightly lower price, not necessarily the worst areas, but the lower price properties, for example, sub £200,000, maybe sub £180,000, you're looking at where they will probably rent quite well. But if you can find the pockets where they're doing a lot of infrastructure, where there's a lot of investment happening, for example, on the outskirts of city centre, around the ring road, just on the other side of the ring road, there's a huge amount of investment happening there. And what will happen over time, those property price will start to increase because they'll be the nearest properties to the city centre within the ring road area. And the ring road is where they've done the low emission zone as well for the vehicles. So what you'll find when you see that a lot of money is being spent improving an area, or an infrastructure is being put in, or new shopping centres going up, these will gradually help contribute towards house prices. Now, there's no guarantee of this, but generally speaking, you find over time they'll start creating a lift in the value. Now, where we are in Birmingham, we're in King's Heath here in our offices. So the King's Heath train station is opening up very soon, and the Moseley one as well, and also the one in Sturchley, the 3 close by to us here. They've been closed for a number of years. But what this will mean is when they reopen, it will be easier to get to city centre. Then from there with HS2, get to London. And so it's just going to make getting around much easier, which means they become more attractive areas to want to live in. Now, it might be that King's Heath's already too expensive for where you're looking to purchase, but then you start looking on the periphery areas like your Sturchley, your Kings Norton and places like that. So it's Firstly, it's where's the investment been happening in the city that you could benefit from as that starts to improve. And secondly, it's a case of where's the next best area. So if you can't be in the best areas, what about the bordering areas, the surrounding areas, and how are they performing? Can you be there? So hope that helps. So the voucher code that you can see on the screen now for those who have just joined us, very quickly, we've got our property meet launching on Tuesday, the 9th of November. It's relaunching. I'm so excited. It's been nearly 2 years since the last meeting. Meetings of traditionally had 100 plus people there every month. We're all interested in property. You can learn, network from like-minded people, or try and get the best speakers there for you to share their knowledge and experience on. They're sharing my knowledge and experience with you as well. And the meeting is, as I said, restarting on the 9th. And what I'm doing off today's live stream is giving you a gift if you book your ticket either today or tomorrow, i.e. by the end of the 1st of November. If you book your ticket, we've got 2 workshops that we're running in January. One is for those getting started to help them with the strategy. And the second one is those that are much more experienced, who are looking to really push forward and scale their business. And I'm going to gift you a place on those workshops when we run them in January. If you buy your ticket today, you just need to use this gift code 111GIFT when you book your ticket. Go to sajhussain.com/networking, use that gift code to book. And what that will do is we will collect those today and tomorrow for the people that book using that. We'll give you the workshop as a gift. But the other thing, as I said, I'm doing is on Tuesday the 9th, our guest speaker, Neville Wright, will be doing a mastermind session with us beforehand, before we do the main event. That will be a very small group of people. And I'm giving away one place of that round table. I'm going to pick a winner from the people that book today and tomorrow, and we'll do that. We'll announce that on Thursday in a few days' time. So I hope that all that makes sense. Let me have the next question then, Khalid, please. So this one's from Mohammed on YouTube. How can you find investors for a project? Mohammed, this is a great question. How do you find investors for a project? How do you fund your projects? So the first thing you got to do is have a good project. The project needs to be one that's going to produce a good return, one that's attractive. But then the other thing that people often forget about is you also have to be investable as well. There needs to be a reason why people should invest with you, 50, 100, hundreds of thousands of pounds. They're going to invest with you, so you should be investable. And the way to be investable is, firstly, you understand the product that you're trying to get people involved into. For example, might be a buy-to-let, might be a flip, might be service accommodation, might be whatever it is you're trying to do. You might not have a lot of experience on that, but you've got to demonstrate why is it that they should invest with you. You've got to really understand the strategy. You've got to have people around you that can help and support you, deliver it, minimize the risk. If you had £100,000, if you just bumped into somebody at a networking event, they said, "Oh, I've got an interest in you," would you just give them the money? No, you absolutely wouldn't. It would make no sense whatsoever. In the same way, you have to think about why people would invest with you. Now, I've got lots of videos on my YouTube channel about raising money from private investors, something I've done a lot of over the years. That's essentially how I built my business, using private investors' money, joint venture partners, or people lending money for us for projects. And we continue to do that right now. And a lot of that knowledge in terms of how we've done that, we've got quite a few videos on the YouTube channel that explain that in detail, so you can follow that too. I hope that that helps with that.
Instagram question coming up.
Oh, so we've got a question from Instagram just coming up. Khalid is going to flash up on the screen in a moment. So we'll be running our live again tomorrow evening. The reason we're doing it on a Sunday today, because last week we had a challenge with the internet in the office, and the bandwidth was quite poor, so we didn't stream last week. So we've done an extra one today, and we're redoing our regular one tomorrow as well. So on Instagram, this is Darius. Can you talk about refinancing HMOs on commercial mortgage in the formula they use? Well, Darius, this is not so straightforward. It's not simply a case of here's the formula, you follow this and this works. But generally speaking, to get a commercial valuation, which is what people aspire to do, is and what that means is you're getting a valuation of a HMO based on the income it's generating, as opposed to the bricks and mortar value as a house. So you might have a house next door that's worth, say, £250,000. You might have a HMO on the other side that's a commercially valued at, say, £400,000. Why is there a difference? Because both the houses on the outside look the same. And the reason is because the income, it's based on the income that valuation happens. And it's a little bit like a business. So say if you're going to buy a business, let's say you're going to buy a pizza restaurant, you look at how much profit it's making each year, and you pay a multiple of that profit to buy that property, the goodwill, as we'd talk about sometime. And essentially, that's what it is with commercial valuations as well. And there's no clear-cut formula because there's different ways to look at this. And I have a video where I talk about this in detail, how to do this on the YouTube channel. Just search for HMO on my channel and on YouTube. You'll find a video there where I talk about it in detail. But a very crude way of doing this is you can look at 10 times the net income that you have on the property. That's after your running costs. Take the figure. So, for example, let's say you're left with £2,000 a month after paying the mortgage, not the mortgage, sorry, the other running costs. And so you've got £24,000 a year. So that times that by 10 give you £240,000. It's a very crude way, but if you were doing kind of back of an envelope type calculations. But that video will explain in more detail exactly how the surveyors look at this, how the lenders look at this, and how you can get that type of valuation. Because it's not a case of you'll take any property and you'll get that valuation. There has to be substantial changes to that property. For example, it needs to be a HMO Article 4 area. It might be 7 bedrooms, so it's sui generis. If it's a 3-bed family house and what you've done is use one of the living rooms or put a bed in there, you are not going to get a commercial valuation on that, running that as a HMO, because how is that going to be different from the house next door that's a family house? Because they could put a bed in the living room as well. Does that turn it into a £400,000 property, the example I gave earlier? No, it doesn't work that way. So I hope that's given you a few pointers on that. So our next question is from Faisal on YouTube. Hi Saj, my brother who currently resides in Dubai, UK citizen, is looking to purchase a property in London. Mortgage, can you comment on expat mortgages, please? 10-15% deposit possible. Faisal, I'm not going to be able to help you with that because I'm not a mortgage advisor. But I know as a resident in Dubai, you should be able to, or he should be able to get a mortgage. In terms of the deposit, I'm not entirely sure. If they're first-time buyers, you might be able to do that. But if you want a good contact, reach out to us. We ask you to complete a little form that gives us a bit of background about what might be the right type of broker for you. Then we'll connect you with the right broker that can probably help you with that. Is it possible to get a buy-to-let mortgage with only 10% or 15% deposit? Not as far as I'm aware. I think you need a 25% deposit. There might be some 20% deposit products around. Generally, they tend to be more expensive. So 25% tends to be the norm. Occasionally, when lenders are feeling confident, they might go to an 80 or 85% loan-to-value mortgage, i.e., your deposit then drops down to 15 or 20%, but that tends to be quite rare and not the norm. When you're investing, it's thinking about how can you do what you do and scale it. So the best way to grow a buy-to-let portfolio in that way is you adding value on each property, then you're refinancing and taking money out and going again, as opposed to putting the minimum amount of money in each property. Because if the market turns slightly, let's say prices drop slightly, let's say they drop by 10% and you've only got a 15% deposit in, that means your equity level now is down to 5%. The lenders get uncomfortable with that as well. And also in the last recession, the big recession, the credit crunch, when that happened, I saw quite a few lenders just calling in their mortgages at that point because they were uncomfortable about the low level of equity or no equity that the owner had. So you've got to make sure you're protecting yourself for the long term as well. So FME on YouTube. Can you hold a 50% share in a property under a limited company and 50% under a private individual's name? Yes, that is possible because it's essentially the company is a legal entity. The entity is the one that would purchase the property, and then what you would have is the owners of that company, and the owners are the shareholders, and the shareholders can be a limited company. A shareholder can be an individual as well, or it can be a combination. So there's no issue in terms of doing that. So our next question from Azim, commercial and contract cleaning. Nice advert there. Are there any commercial lenders who are Sharia compliant for borrowing without interest? They are very, very few that operate in that space, and it's a fairly niche. It's a fairly niche market. The challenge is we have probably the most advanced Islamic finance in the West here in the UK. but we're still quite, it's still in its infancy, and there's not a lot of products around, and they're very cautious in terms of the lending that they will do. But if you reach out to us, we can connect you with a broker that specializes in Sharia-compliant finance, and it might be able to help. Also, I've got a video on YouTube talking about halal financing, different ways you can invest in property without getting involved in interest. So just a reminder, if you haven't already, make sure you book your ticket down kind of here. I'm pointing at the right camera. sajhussain.com/networking for the property meet, which is relaunching on Tuesday the 9th. This is our network meeting we hold every month, where we bring great speakers to share their knowledge and experience with you, but also an opportunity for you to network with 100+ like-minded people in the room. And this month we've got Neville Wright coming, a very experienced business and property person, worth 100 million. Built over 600 homes, sold one of his businesses for 70 million, a very experienced guy. And if you book your ticket either today or tomorrow by the 1st of November, and you use the gift code that I mentioned earlier on, 111GIFT, when you book, then you've got 2 gifts from me. One is a workshop in January. You can either have one if you're starting out and you're quite new in property about getting strategy right, or the one if you're more experienced, where we talk about how you can scale up and build that business. And the second gift will be, I'm going to pick one person out of a prize draw from all the people that booked today and tomorrow using this code to have a roundtable mastermind session with Neville on the day before the meeting. So let's get our next question. This is from Adam C. Hi, Saj, what's the best rent-to-rent strategy for cash flow, rent to HMO, rent to service accommodation? I guess, Adam, it's not really a case of best. If you say which one's going to make more money, I would say, depending on how the property is structured, probably the service accommodation is going to create more income than the HMO is. But your operational costs are going to be higher on the service accommodation. But it also depends. Is it a house? Is it an apartment? What is it that you're running, and who is it that's going to be staying in the property as well? So they're both good cash flow strategies. It just depends what's going to suit you. So the HMO requires a lot more work than a regular rental, as we were speaking about earlier on today. And then a service accommodation unit will probably require even more work than what was required to run a HMO. So you've got to think about how much time and effort you've got to put in, and how many of these you might want to build or create the cash flow. And I always say with the rent to rent, it's a great strategy to be able to build income and be able to get started in property. They require a lot of work, effort, and skill. Most people will not succeed because they give up too quickly. They're not persistent enough in terms of getting the deals or really building the systems and the processes to be able to build these businesses. Because really, their rental management, that's what you're doing. You're managing other people's property to try and make more money out of them for what the owner is going to receive. But then to think about it is a stepping stone strategy. So once you've got, let's say you're generating £1,000 from one of these units. Let's say you've got 3 or 4 of these operational. You've generated about £4,000 a month. That's more than most people earn on a regular day job. Even after your tax and expenditure, you should be comfortable to probably give up a day job at that point. Or maybe you're still running this as a part-time thing. But what you should be focusing on is how can I now start owning property and building assets off the back of this business? I think the mistake I've seen many people make, they see renter as the business. I see it as a stepping stone business where you create the cash flow, and that helps you to start buying the property, whether you're going to flip him or whether you're going to keep them as long-term buy-to-lets as well. So hope that helps there, Adam. So we are now going to do our very last question before we wrap up. And remember, we'll be back tomorrow evening at 8:30 as well if you're watching live. And if you're watching recording, that means on Monday evenings at 8:30 p.m. We are here every Monday. So Ashir Khan on YouTube. Hi, Saj. Firstly, hope you're well and love your content. Thank you very much for that. Question is, when looking to buy a property, what are some of the key qualities, things you look for in that deal that keep up the amazing work? Thank you very much. I think the thing here, I guess the question here is, it depends what you're trying to achieve. And that's a favorite kind of go-to phrase for me. What's the outcome you're trying to achieve? Because I think that should always be the starting point. So for example, if what you're looking for is something that you can add value to improve the value significantly, push price, ceiling prices, if that's what ultimately you're trying to do and that's what you're trying to achieve, then what you're looking for is a property that has a scope to do that. And so how are you going to do that? It might be a property where you can extend its volume. It might be an extension, a loft conversion with a dormer, something you're going to make bigger than it already is. It may be that you're just going to renovate it, improve it, make it nicer than what it is, probably reconfigure it, maybe move a bathroom around, open plan living, or it may be that you're actually purchasing the property for less than its true value. You're getting some equity in there straight away day one. So it's understanding what is it ultimately you're trying to do. So then you are thinking about, okay, are those things going to work with that particular property? So as I said, if you're looking to add substantial value, is it one that you can add value to? If you're going to do, say, a regular buy-to-let, is it somewhere where you're going to get lots of good rental demand from the type of people you want to rent to? So for instance, if you're doing, say, a student HMO, is it close enough to university? Are people going to still travel to it? Will they pay the rents that you want? So in Birmingham, there's been a massive change in student housing over the last few years, where you've got these huge purpose-built student buildings that have been created, beautiful quality, prime rents being charged. But what that's done, that's sucked up a lot of demand from where the people would normally be in houses. Now they've moved into these buildings, so they've kind of vacuumed up a lot of that demand there. And the properties that say further away from the university, that maybe you have to catch a bus to get to, like for example, Erdington traditionally was in North Birmingham, if you know the area. There used to be a lot of students there at one point. Now there's very few students there because it's not so practical to get to universities from there, and there's much more nearer accommodation available. So it's thinking about all these factors. So it's not so simple as saying what's the quality you look for in a deal. It depends what it is that you're trying to achieve. So I hope that helps. So just before we wrap up, a quick reminder: if you haven't already, book your ticket for the property meet, which is on Tuesday the 9th. It's at Edgbaston Cricket Stadium. Fantastic venue, an amazing speaker, worth £100 million. Neville Wright, he'll be there with Marilyn, his wife, as well. They built this massive empire. They built 600 homes. They've sold one their business for 70 million. We can all learn something from people like that. They'll be there sharing their knowledge and experience. And if you book your ticket today using the voucher code that I mentioned earlier on, 111GIFT, then I will gift you a workshop in January that you can come and join us on as well. And also, I'm going to pick one person that books their ticket today or tomorrow. We're going to pick one person out of a prize draw. On Thursday, we'll announce that. We'll also get a roundtable mastermind session with Neville as well on Tuesday the 9th. So thank you so much for watching. I really appreciate your time, and I look forward to seeing you again tomorrow evening.